Adam, I hear you got some great news over at Coastal Harbor Properties. Why don't you share with me? I haven't heard it yet, and with the listeners.
Yeah, thanks for asking, man. I do. We had a tenant re-up, so they signed another 12-month lease at one of my properties. So that's always good news, man. That is a stream of income that will continue for the next 12 months, man. That's money coming in when I'm sleeping for the next year.
Fantastic. That is the goal. Well, with this, the renewal, did you increase the rent by any means, any percentage basis?
Yeah, we did. On this one, we increased the rent by 3%. The tenant was asking to keep the rent the same, but we went ahead and raised it. And it's the first renewal by this tenant in this unit. And it's really important that you set a precedent that rent will be raised each year. Obviously, if you're going to be in a kind of a down economy and the trend of rents is down, you'll follow that as well, right? But when you're not, when you're in an economy like ours where rents continue to rise, you just want to set the precedent that you're going to be raising rents in a year because you're running this like a business. You know, you're not running this like a mom and pop who isn't on top of things and allow rents to kind of stagnate over the years. And that's not profitable to do that. And it makes it very difficult if you ever do want to increase the value of your property by raising rents to do so in one big kind of, one event.
Okay, so when you increase the rent, what's the idea there? Why would that behoove? Obviously, you can make more money, but why would a landlord or owner like yourself want to increase the rent?
So profitability is the main reason, and especially in commercial property, which is what I'm focused on right now. So I'm preparing, and everything I'm doing is around focusing on that and building in practices that will serve me well as I invest in commercial properties. But um, with commercial properties, the value of the property is determined by its profitability. And if you want to continue to increase the value of your property, you need to raise rents.
That makes sense. So it's not like a residential comp or what's the word I'm looking for?
Uh,
FMV, fair market value. It's more
right.
so what income is this property producing? And that's how we're going to appraise it.
That's exactly right. But even if you're managing single families, it's good practice for a landlord, for a property owner, to raise the rents because you're trying to maximize your profits, and the costs of doing business do go up every year. It costs you more to maintain your property every year when prices are climbing. Again, when you're in a down cycle and prices are falling, then you have to adjust that way also. But when they're going up, then the cost of goods are going up as well. It just costs more to maintain things and to run the business.
Absolutely. Okay, so that makes a ton of sense. With with raising the rents, I hear that's like something to do to hedge against inflation as well. Is that the thought process that you have?
Absolutely is. The value of the dollar drops over time, and we experience that as inflation. And if you do not raise rents at the same rate inflation rises, you're essentially losing money on your property every year, and you don't want to do that. So we try to keep pace with inflation.
And are you talking to the borrowers, or excuse me, the tenants directly, or is this done through the property manager?
This is done through the property manager. So they negotiate directly with the tenant, and then they, come back to me for approvals from the, buyer side.
So this is almost pretty basically passive income, right? You have somebody else doing the hard lifting. You pick up a phone call, say yes or no.
This is about as passive as it gets, right? I own the property. I have a property manager manage the property. I manage the property manager.
That's awesome. And that is a stream of income, which transition us into our topic for today, which is streams of income versus a pile of money. And Adam and I are going to talk about where we stand, but with everything that you hear, we ultimately want to gauge what you think. Like, what would you rather have, a pile of money or streams of income?
And if you haven't thought about it in the terms we're discussing before, let's talk about that too. I mean, Kevin and I love to educate. We both have the hearts of teachers. We like to interact with people who are getting value from the show. And if there's something that we've caused you to think differently about, or maybe something we say you still have questions about, we'd love to hear from you. And at the end of this program, we'll talk about how to get in touch with us to do that.
Exactly. And what I was raised to believe was you get a good job, you go to college, get a good job, save up for retirement, work till you retire, buy a house somewhere in between, and then that's it. So you're resting on that big pile of money or that nest egg. Uh, but that's what I was taught. Now that I learn more and more about how it should be done effectively, that does not seem like the route that I want to go.
Yeah, Kevin, I was taught the same thing. And I'm envious of you because you're learning this at a much younger age than I did. And I mean, I think that's totally awesome for you. And I'm just glad that I'm learning it now before it's too late. But I'm thinking about things totally different than I did before right now. When I think about having a big pile of cash or a nest egg to help get me through retirement, that scares the heck out of me. On the other hand, if I think about a lot of individual passive cash flow streams with money coming in every month from various sources that more than cover my expenses, that gives me a very safe feeling.
Agreed. And what I also like to look at it from a risk perspective. If I have one big source of income, what happens when that source of income stops? For example, if you're playing the cash flow game and let's say you lose your job, if you don't have any assets, you're kind of out of the game, right? Until you run out of money that's in your savings or account or whatever. The same applies in real life. What happens if you lose your job? For most people, and more specifically, our listeners who are in working a 9 to 5, what happens if you lose your job? Do you have assets to cover it? And it's one thing to start thinking about because nobody's job is 100% secure, I'd say.
Yeah, that's true. And when you're thinking about retirement, that's one form of losing your job. It's intentionally losing your job, right? You're quitting for retirement. But it's not different than if you have passive cash flow, passive income streams that will cover your expenses. You being able to do that when you're much younger. You can do that at any point if you've got enough income streams to cover your expenses.
Yeah, so that's a very good point. I think it's easier to acquire income streams than it is to acquire one big nutshell of cash or whatever you want to call it, money to pay for that lifestyle.
Yeah, and the way I like to think about it are these mini oil wells. I really think about these little mini oil wells pumping cash flow to me, and the more of those little ones I have, the more income streams I have coming in that can cover whatever expenses I may have. And those just work all the time. They work when I sleep. They work when I'm awake. They're constantly going and sending me in income streams. The difference between that and a big pile of cash is that with the big pile of cash, as it sits, you're constantly depleting that. So what always scared me about that in terms of retiring and not having more income was that would eventually be depleted. And if my calculations about how much I'm spending were off in terms of when that would get depleted, I would be in a very bad situation if I were
Right.
still alive, right?
Yeah, yeah. I think it's a psychology standpoint too, like a psychology exercise, if you will. Maybe it's just me. I am a procrastinator. It's something that I'm actively working on trying to be better at. And I'm always thinking to myself, maybe it's an ego issue, but I think, oh, I have so much time. Oh, I have so much time. And then next thing you know, like I don't have as much time as I thought. What would be any different than saying, oh, I have all this money. Let's say $10 million. I have all this money. I can live off of this. I'll spend more than I think because I'm looking at the bank account like, yeah, I'll totally be fine. But how am I, it's so hard to see, let's say 30 years into the future, right? You can't, it's impossible. That's why it's harder to plan with a big pile of money than it would be with streams of income.
Yeah, absolutely. And if you have a big pile of money, it's essential that that big pile of money be invested to provide those income streams that we're talking about, or else it just essentially erodes.
Oh yeah, it'll erode A with inflation like we just talked about, and B because you're spending. So it's just going away. It's eroding away. That's a good way of putting it.
Yeah, I have a friend who was telling me not long ago that this friend has 10 million in savings, and they were telling me,
Hello, friend.
right? They were telling me it's not as it's not as much as it sounds like. It's not as much as you think. And their perspective is from what we're talking about. They see that money getting taken and decreasing. It has to be reinvested, or else you're just going to spend bits of it, and then with the inflation component you mentioned, it will be gone sooner than you realize. So it's essential to have the income streams over just a lump sum sitting there.
Yeah, well, let's think about the acquisition of either a stream of income or a big lump sum of money. You can use leverage in your favor to get a stream of income, right? But I don't know of a way to use leverage to get a big pile of money. And if it is, how big of a pile could that be, really? Maybe this is my own ignorance to the situation, but if somebody can educate me on that or educate us, I would love to hear how that would be possible.
I can think of some ways that you could use leverage to get a big pile of money, but all of them involve working in terms of if you ever quit the activity, that will stop, right? So think about flipping a house,
Right. I was
or
thinking
if you
about that.
move
Yeah.
for something bigger, right? Uh,
Yeah.
One of those could generate a nice pile of cash. However, if you stop the activity of the mass marketing, the finding of the deal, the construction to rehab the house, more marketing to sell the property, and then getting the payday when it actually closes. If you stop all of those work activities, then your income, that big pile of cash, isn't continued, right? You get the
Agreed.
one and done. Versus if you have the asset, if you have a cash flow producing asset, then really, yeah, there's a minimal amount of work in terms of staying on top of your property manager. But other than that, like the
Yeah.
tenant leave, they help find a new one. That's kind of what they do, right?
I would argue it's the
Nothing.
same amount of work to find the opportunity that you're for you if you were going to flip a house versus if you were going to hold on to it, right? It's just kind of changing the strategy there.
Well, that's
But
why I personally have never even attempted wholesaling or flipping. When I decided to get into real estate, my mindset was exactly what you just said. It literally is the same work.
exactly, and then you get the benefit of it just kind of sitting there and
Yeah,
you getting paid. Like that to me is why I'm doing this in the first place is because investing is the fastest way you will get out of the rat race.
yeah, me too. I mean, I
Yeah.
like my job. My job that I have in software and being a transformational coach, I love it. So, I don't want another job. I don't want to replace my job.
Yeah, it takes time, energy. Those are all limited things, right?
Right. Yeah.
So if somebody has a pile of money and they want to change it into a stream of income, what would you recommend that they do to transition into that?
Well, my answer there is going to be the same thing that I'm doing to do that, which is invest in multifamily. My belief is there's no better way to build massive wealth than investing in multifamily apartments. And I think that there's tremendous opportunity even in passively investing that way. In other words, if you have capital, investing that with uh, a general partner, an active investor like myself or others like me, syndicators, right? I think for me personally, that would be mine. Um, and what would yours be, Kevin?
Yeah, I would say the first step to even taking it back a step further, I would say is to get educated. Figure out a what type of income you would need to be financially free. And we're talking about more so just have the freedom to not work ever again, right? And then figure out a route that works best for you, thinking about risk tolerance, basically figuring out your investor identity. And you'll do that by getting educated, what's out there, talking to people, understanding what makes the most sense for you, the lifestyle that you want, and then going from there. And I'm not discounting that apartment complexes are a fantastic way to build wealth. All I'm saying is, I don't think real estate is for everybody as much as I would argue it should be. But then that's okay, right? Your investor identity is your investor identity, but getting educated is absolutely the first step.
Yeah, you know what? I totally agree. Actually, that is a better answer than mine. I think my answer is more for someone who already understands very well their goals, and they're comfortable with investment vehicles. But for someone starting from scratch, your answer is the right one. Step one, step zero is get an education. Begin that process. Books, awesome podcasts like Tech Guys Who Invest. Shameless plug.
Yeah. Or networking, talking to people, all of those
Absolutely.
things. You could find somebody who has the lifestyle that you want or aspire to have, get to know them, and they may not share every detail about how they're earning their income, but you'll get a sense of it just by being around that person or observing them.
Yeah, 100% agree. Education is crucial.
And we would love to hear from our audience, our listeners. What do you think? Would you rather have a pile of cash or streams of income? Please, absolutely let us know. And there are a few ways that you can do that. The first is you can go ahead and do that by leaving a comment in the show notes section, or go in the episode of wherever you're listening to this and leave a comment, or go to TGWI podcast.com/streams. Leave a reply, let us know, or you can email us directly, techguyswhoinvest@gmail.com. We want to hear your thoughts. We want to engage with our audience as much as possible.
Yeah, awesome. Absolutely. We definitely do. And also, we'd like to interact with our listeners via Instagram and YouTube. So, Kevin and I are going to start talking a little bit more about that, and how we'd like you to subscribe to our YouTube channel. You can search for us, Tech Guys Who Invest, and stay tuned for more info on that.
Thanks, everybody.